But in the last 6 weeks of the year, we announced 6 deals across the U.S. and Europe, many in sectors we like: digital marketplaces, enterprise software, energy transition. And in real estate, we also saw a pickup in activity, privatizations, a big distressed loan portfolio. So we are seeing a pickup. It does often take a bit of time, but things are starting to loosen. So it does feel like for M&A, a bit of an inflection point.
That was Blackstone President John Gray weighing in with his expectations for deals, and we've seen a bit of a comeback for activity this year. Now, Bain is out with its own global M&A report, the firm writing, quote, "This year, buyers have their eyes on a growing backlog of deals," adding that as interest rates stabilize, we expect the logjam in M&A markets to break, and when it does, competition for assets will be significant. I want to bring in one of the authors of the report, Suzanne Kumar, a Global Practice Vice President of M&A and Divestitures, and our own Nina Trentman, who helps lead Bloomberg's deal coverage for us. Suzanne, let's start with you. When does this happen? When do we get the flurry?
Well, this backlog has been building for a while. Last year, the only thing that buyers and sellers seemed to agree on was that they didn't agree on price. And so it was happening 2 years of a market decline and declining valuations. Buyers were looking for a bit of a deal. Sellers didn't want to sell in that environment, and so they're holding on to assets wherever they can.
So, Nina, you cover deals for Bloomberg News. You talk to a lot of CFOs, a lot of CEOs. What are you hearing from them when it comes to the urgency to make deals?
I'm certainly hearing that people are more optimistic this year than they were last year, talking to that backlog that you pointed out, Suzanne. What I'm certainly hearing from people is interest to do deals, to basically add to the portfolio, to add gaps that companies might be having, specifically in AI, in technology. What we are also hearing is people being concerned about regulatory issues. Yeah. So that comes up in many of the conversations, and therefore many of the companies also saying, well, maybe we'll do tuck-in or a smaller acquisition to avoid some of those hurdles.
So these aren't like transformative mega deals. Like we saw some of that in the oil patch, but like that's not what we're really looking at.
Well, I think, of course, it's hard to forecast most of the year, but I think so far what we've seen this year, we've seen more these kind of smaller deals. We saw a few pharmaceutical deals in recent days whereby companies specifically acquired a type of therapy or a medication instead of just buying like a whole big company.
Nina mentioned AI, and that's something that M&A deal makers are starting to incorporate in their process. How are they using it, Suzanne?
Yeah, so it's the early days, but it's really exciting. A small portion of early adopters are using Gen AI for sourcing, screening, and diligencing deals. That makes sense because there's a lot of outside-in data that Gen AI can help synthesize and summarize. The real question is going to be, as Gen AI really becomes part of how we all do business in our daily life, can deal makers use Gen AI to get a competitive advantage, to find a target that no one else can see, a differentiated insight on a target, and ultimately better outcomes in their deal making. So that's what we're really going to be paying attention to as this matures.
It's multi-pronged. It's like using generative AI to help find the right deals, and then it may be also merging within that sector to begin with.
Right.
Where are you seeing the bid-ask spread come in the most? Is there a particular sector?
Well, one place that it really was evident in the past year has been in technology. So 2 years ago, 2021, the median deal valuation was at 25 times. It was down to 13 to 15 in the past 18 months. Wow. And so in that environment, you're not surprised to see, again, that sellers are kind of waiting out. They remember those days of high valuations, and buyers aren't really willing to come to the table if that's what the sellers are expecting.
You talk about technology. Healthcare is often said in the same breath as technology because it has that growth aspect to it. Nina, what are you hearing about from the tech firms when it comes to biotech, which relies on a lot of M&A?
Well, we've seen a few deals come to market already this year. I think it's interesting to point out that if we just look at the volume of deals that were announced this year, that we're already at, I think, sort of roughly $212 billion involving U.S. companies, which is up 76% compared to the prior year period. I guess that tells us that there is interest from corporates, and also it's not just the technology side, of course, but also interest rates, for example. So companies are expecting interest rates to come down this year. So if you can raise debt more cheaply to fund your deal, that might also be a positive. So it sounds as if there's quite a few positive signals there.
On the other side, do you expect this now to be an exit market for like private equity or VCs or something? Like, will that part of the market open up?
Well, The one
Private
thing that I
equity
can
would love
observe is that more than half of portfolio companies have now been held for more than 4 years, so kind of pre-COVID era. And just from a fund economics perspective, they do need to get to market. So we're going to be looking for some momentum there as well.
Suzanne, really appreciate your joining us today, sharing the results of your survey. Global Practice Vice President for M&A and Divestitures over at Bain. And thank you as well to our very own Nina Trentman, who covers deals.